Afternoon, Chris. How are you?
Very well. Welcome to August. My goodness, we're here already. Welcome to the summer. Welcome, hopefully, to, I was going to say warm weather, but we probably had a bit too much of that already in July. So good weather. Let's say that.
Yeah, let's hope so. Let's recap then, because we were just talking about how we can't believe it's already the 1st of August. It's the start of a new month. And if we reflect where we were a month ago talking about markets, there were plenty of concerns. We were thinking about interest rates. We were thinking about, recession fears and so on. But July turned out to be a relatively good month for investors.
That's absolutely right. Whether you were buying shares or buying bonds or buying anything in the middle, it was a good month. But that is often the way equities markets are. People worry about how investments are going. They're saying, my goodness, there's lots of concerns and issues out there. But what we saw in July was actually, yes, higher interest rates from the Americans, from Europe, and I guess we will see higher interest rates from the Bank of England in the early days of August. That undoubtedly is also going to happen. But we also saw a lot of companies come out and say, actually, the world is okay. It's not easy, it's difficult. We are seeing rising prices and other issues, but people still need to do things. And I think what we've always got to remember is that 2022 is always going to be a better year than we saw last year or the year before. We had all of the COVID challenges. We're recovering from that, thank goodness. And even though there are some big issues out there, and I don't need to tell any of you about inflation and worries about higher interest rates, sad issues still in Ukraine, among many other issues. Fortunately, the world is still getting a little bit better. Yes, interest rates are going up. Yes, the Bank of England will further raise interest rates. Yes, unfortunately, we are going to have to worry about inflation for a bit longer. But when I look forward over the next few quarters, when I think about next year, when I think about still the fact the world is getting better, it's going to be okay. And that's why I think financial markets got a bit better during July and actually bounced back a bit from some of the concerns and issues and problems of earlier in the year. So it's not easy out there. As an investor, we've talked about this before many times. The important thing is to play the medium game. Most of us are pension fund investors for the next 15, 20, maybe more years. Some people, fortunately, maybe somewhat less than that. But we're always looking forward. We're not looking to today or tomorrow. We're looking forward to next year, next quarter, next decade, next, even further than that. And that's the important thing always in investment. Don't worry too much about today. Think about tomorrow.
Yeah, absolutely, Chris. And even for the investors out there that are thinking, oh, I'm going to be retiring 5 years, a lot of pension investors now actually go into drawdown. And then you've got to include that time frame as well as how many years you've got to retirement. And you're absolutely right, drawdown could see you invest for another 20 years. So it's not just, today you've got to worry about, as you've said there, it's the long-term future, isn't it? Let's touch on some of those positives then, because it's nice to sort of share some good news. For the average consumer, we've seen some price reductions in fuel as well, haven't we, Chris? Could that be an early indicator that inflation in certain areas is easing?
The answer is simply yes. The reason why things like petrol prices have gone slightly down is because oil prices have come slightly down. And even though we still have lots of concerns about Russia and some of their clear silliness and crudeness in geopolitics, what we are seeing are lower energy prices. And I think that will probably continue as this year progresses. So that is a good news. But here's what I would say to people generally about inflation. And you probably see it yourself when you go to the supermarkets or have a delivery from somebody. Unsurprisingly, companies are finding it harder to sell products. And so they're having to respond to that. They're having to find deals. They're having to find new ways to sort of remain relevant for all investors, all people wanting to buy products. And so consequently, you are actually seeing slowly sort of an indication that you are seeing some lower prices. And as we progress over the next, so I'm not even going to say the next year, I'm going to say the next 6-7 months, when we get into early 2023, even though I know we've got to go through some horrible times still with gas and electricity bills, particularly in October, I believe. Everything else, though, I think we're going to see lower prices. So as we move into 2023, we're going to be worrying less about inflation and more about the things that actually are an even better indicator as to the progress of an economy, whether we're still seeing jobs being created, whether we're still seeing economic growth, and matters such as that. And on those fronts, I'm still feeling okay about it. I'm still seeing a UK economy which is still bouncing back from some of the challenges of the COVID period. Of course, we'll have a new Prime Minister then and other issues and everything else around that. But generally, what I would say is don't worry too much about inflation being a permanent problem for many years. I don't think it is. I would worry more about the fact that you've got to always stay relevant, stay involved in areas such as investment, and not to worry too much about inflation as a, oh my goodness, we've got to put all the cash under the bed and hide. The world is not like that. The world always gets slightly better over time, and I still think we're in that mode.
Yeah, no, I concur, Chris. Touching on politics then, which is never avoided when you're talking about investments, because they're always impacted by world politics, as we've seen for many years. Since we last spoke, there's been a huge leadership campaign going on in the Tory party. You're absolutely right. We're going to see a new Prime Minister. They both seem to be playing the angle of there's going to be tax cuts, there's going to be tax breaks. Depending on who gets in, can you see that having an adverse or a positive impact on markets?
I think reality is we see actually when we get the budget. The budget, you recall, the budget happens at least once a year. It seems sometimes even more than that. And people always used to worry that whenever there was a budget and tax changes and new policies and things like that, it would have a huge impact on the financial markets. Reality is it very rarely does, apart from some very specific issues in specific areas. Reality is that stock market per se is actually a very global thing, particularly in the UK. And so UK politics only has so much of an impact. If there was going to be a big impact, I would say it's more likely to be on the pound. The pound, though, has already been under quite a lot of pressure in recent years, particularly against the dollar. So my feeling is actually, will there be too much impact on the UK? Probably not. I'd say where it becomes potentially more of an issue is if you get things such as relationships with Europe, issues with Ireland, and problems with supply and issues such as that. That is more likely to have an impact ultimately on the UK economy. So watching how the new Prime Minister, when they're announced, when it's decided who it's going to be, how they react to issues such as that will be quite important. But I think I'd go back to what I said a few minutes ago. Basically, every government around the world is worrying about not just inflation, but also the importance of jobs and growth and things like that. So consequently, any government that says, wow, we've got to do something very radical, be it reducing taxes by a lot or spending a lot of money to do something, has got to sort of acknowledge the fact that you never get to do that without a cost. And financial markets, as you see at the moment, are having to accept higher interest rates and matters such as that. So it's always a bit tricky being a politician. You can't just click your fingers and do something. My guess is we're 2 years away from the UK election. Whoever the new Prime Minister is going to be, they will choose to do something in a year or its time, i.e. a year or two before the election. They won't do something immediately, even though they might talk about it in their excitable leadership campaign discussions. That I think is the reality of politics. But we shall see. I mean, as always, hard to predict. But all I would say is the world is okay. We're not going to have to worry so much about inflation next year. What we should be worried much more about is jobs, and underneath that, really growth. And that's what politicians should be a bit more focused on. So if they can do something about some of those issues, that will be helpful. But ultimately, the best idea still is to encourage business to keep on pushing forward. And that's not just via lower taxes, that's through many things such as education, such as other initiatives which may make the average company more happy to employ more people. So it's not something I'm too worried about for the stock market, but obviously something of interest to us all, because who the Prime Minister is of course important.
Yeah, absolutely. Thanks, Chris, and thanks for that sort of recap on a couple of key factors there that are playing out at the moment. We will call it there, and we'll be no doubt chatting on new subjects and new topics come September, which will be a blink of an eye, I'm sure, for the both of us. So thanks for the catch up, Chris.
No, absolutely. Have a good summer, everybody.